We will now kickstart the next panel discussion for the day, and it's a very interesting one. It's called Building Sustainable Growth in 2024 and Beyond. And for this, may I please invite on stage Ms. Namratha Swamy, Chief Operating Officer, Mobile Premier League. A big round of applause, ladies and gentlemen. Mr. Rajiv Mukherjee, CEO and founder of IncubateHub. Mr. Rohit Singh, Managing Partner, Dexter Capital Advisors. Mr. Sourabh Deorah, CEO and co-founder, Advantage Club. And Mr. Sanket Deodhar, VP and Head, Digital Natives, SAP India Subcontinent. And to moderate this session, I would like to invite Mr. Vipul Oberoi from Dun & Bradstreet, India, to please take over the stage and anchor this discussion. Over to you, Mr. Oberoi.
Thanks, Nana. Welcome back, everyone. Good to have the audience here of startup founders who would like to understand how to calibrate their growth story. And the conference, if you would have realized, is also spread out into 3 different themes. We are helping startups also understand how to make their products more sellable, how to scale up their business, but also focus not just on the top line numbers, but also on making their businesses more sustainable. Now, this sustainable is more about the business growth, their business model. It should have a long-term vision. And we have here industry experts from, in fact, various industries who would be bringing in their perspectives on how can startups build a long-term sustainable business. So, without actually much ado, as they say, I'll in fact start with Namratha. And in your line of business, your startup, of course, has grown leaps and bounds in the past few years. For you, is there a long-term vision? Is there a metric that a North Star that you look at, or is there a host of metrics you look at?
Yeah. So I think I'll just start with first the vision, right? For Mobile Premier League or MPL, we are a casual gaming platform, and our vision is to ensure we are building the largest competitive platform for gamers from across the world to compete in the largest tournaments. So that's basically the vision. And in terms of metrics, of course, there are a bunch of metrics that we have really tracked, but I'll probably go into a couple of them, again, more relevant to this sustainable growth. So if I break the vision into 2 parts, right? We are a casual gaming platform. The idea is to become the largest and also enable users from across the world. So for us, growth really means 2 axes. One is just in terms of the number and the types of games that are available on our platform. How do you keep adding games that will bring in more audiences into the platform? What is most relevant for users today versus probably a couple of years back, right? So continuing to innovate on the kind of games, kinds of offerings that we have on the platform, that's one dimension of growth. The second dimension is, of course, geographically. How do you scale beyond India? We've, of course, been in India for about 6 years now. And we've tried and scaled across US, we're there in Africa, but the idea is to continue to scale across geographies to sort of bring it all together to make this the largest platform. And I think through the journey, there have been a few realizations, right? Of course, through the COVID phase, gaming was, of course, one of the sectors that saw a lot of advantage when the initial COVID wave happened and people had a lot more time to spend online. But I think we also saw the growth sort of flatten or sort of degrow once COVID ended and things started going
The user love was decreasing?
I wouldn't say user love. I think it was a little bit of saying the time available for users to come and try out new things started reducing. But the users who actually found this as the one thing that they want to continue doing actually continued. So it was more about saying how new users sort of pursued it, right? But I think through this, one big realization for us was it's important to first get the business sustainable and working in the smallest unit. And for us, that smallest unit was first getting it to work in India with a set of 10, 15 games. And then thinking about how do you replicate that playbook that works across geographies or add more into the mix. So I think one big piece that we of course faltered and learnt along the way was initially when you see that product market fit to say per se, and of course love from users for the product, etc. I think there is this tendency to say, can we now sort of grow 10x from here without being fully prepared for what that growth means. It's about getting the internal engine, internal core strategy right, and understanding for every 100 users that you've been able to acquire, are you able to make the unit economics work? Are you able to have that engine really run efficiently and effectively to be able to give you that kind of returns before scaling it to 10,000 or 10 million, right? Because volume by itself can give you some benefits, but without having a core engine to really drive monetization, to drive repeat purchases, repeat behavior of users, it's really hard to just rely on scale and volumes to do the job. I think it's always quality over quantity. It's about getting the core engine right.
And any revenue per customer?
Definitely. So I think for us, the focus is, I would actually shift it to say, what is the kind of payback that you're getting for every customer that you're acquiring? So if you're spending 100 rupees acquiring a customer, are you able to build an engine that helps you recover 100 and of course go beyond that, right? Because the value that you're generating from that consumer only starts after you've recovered that money. So I think for us, that's, I would say, the biggest metric of saying how much are we able to effectively generate value from customers that we are acquiring, and are we able to then scale that continuously, 10x, 100x, and even at that scale being able to sustain.
Sourabh, for your startup as well, do you look at certain goals, or are these more like milestones, or simply the journey?
Yeah, so I agree with a lot of things that Namratha said. As a startup, we are in a little different space. So we are in a B2B space. First, let me do the vision. So our vision is to make workplaces happier. We work with typically mid to large companies to help them engage their employees. So for us, I would say the goals are driven on 3 different steps. So first is personal goal, like which gives me happiness, which is like how many lives you are touching, how many smiles you are bringing, how many activities you are able to derive in an organization, which actually leads to the happiness at the workplace. That's more of a personal metric than really a business metric. Second, of course, we track all the core MIS metric, that what is your revenue top line. In our business, we maintain GTVs, the amount of money which goes to a system, the amount of money a company is spending on its employee. So we measure all of that on our platform. Then, of course, net margins are very important. In terms of milestones, a lot of milestones are built on these top line metrics. But we are very wary of our bottom line as well, because we are a high gross margin business. Our customer acquisition costs are very low. But in this business, it's important to keep on scaling quickly. So that's why we have top line metrics, because relatively other things are sorted in the space that we are in.
You're into a B2B2C business.
So yes and no. So our platform is used by the employees of the companies. What we essentially do is that we manage things like reward and recognition, flexible benefits for our organization. Let's take an example of, say, an Accenture. So they spend X amount of money on wellness on its employees, and that would be completely spent by Advantage Club. So while employees are the end users, but decision making is in the hand of the company. So it's B2B from a selling point of view, but from a product point of view, or B2B2C. So this gives us an advantage that we are 80% GM. Our LTV, your lifetime value to customer acquisition CAC, like is 7:1, which is almost best in the industry when you look at the startup space. And profitability is not that hard for us at overall level, of course, not just at a unit level. So those are easier problem. But of course, there are certain metrics that I think every startup should track, and something like us, which is more SaaS-like, it becomes more relevant, which is like your cohorts of your user, that how much money you are making from the same set of companies over the years, and how many of them are actually staying with you. So those are combination of your net revenue retention rates and cohorts. Those 2 are very core metrics for us, which we chase, and our client success teams have goals to increase that. And that changes the game completely. Like over last 1 year, we went from 110% to 125% on net revenue retention rate. And that increased our EBITDA margins, and that's the real play. That's where we believe we are adding real value if we're able to sell more to the same customer rather than going and only hunting out for new customers.
What gladdens my heart after hearing both Namratha and Sourabh is that there is a big focus on the unit economics, big focus on profitability. And Rohit, in fact, we were discussing that there is a lot of focus on top line, but yes, each one of us is also looking at what is the revenue that can be got from the customer, what is the retention value there. It's a lifetime value of the client which you are looking at. Are these also the metrics when you as an investor, as an advisor, look for in corporates?
Yeah, thanks for this question. I think some of the most relevant metrics have to be as basic, as simple as possible. For startups, we typically, when we advise or even when we invest, the first thing we start off with is obviously the market size. But then the market size is obviously not a blanket kind of definition. India is a large market with a lot of multiple micro markets in it. So the understanding of the founder in terms of what is the final kind of, lower hanging fruit he's trying to tap, what is the kind of understanding he has, is something which we try to, assess once we, evaluate a startup. Typically, large markets in India are valued at somewhere around 2 to 3 billion and above. And any startup which is, focusing on that kind of services, which has a market size of this kind of number, is a first kind of, threshold for us to take the discussion to the next level. And after that, we also evaluate, these startups are all about ideas, but the key thing is about execution capabilities, and that's where, the founders' skill sets and their strengths, their knowledge about the industry and their past background, the way they have come up in this whole career of theirs is also evaluated. So startup evaluation is a mix of both qualitative and quantitative. I guess my colleagues have been talking about LTV and CAC. That is one of the most important of all the metrics which we track. And typically, the way you are saying that you are at a 7 times of that, and that's a great number. For us, the threshold is 3.5, 4 times kind of, a benchmark. And apart from that, you are in the SaaS sector. So we evaluate SaaS startups with typical churn rates, the MRRs, and the annual recurring revenue and the service component of that. So all in all, it is a mix of a lot of factors. And in terms of the change that has happened in the last 1 or 2 years, because the way the market landscape has changed in terms of funding, is that all the investors who are looking at investing are absolutely driven by the bottom line visibility, that if you are loss making right now, what is the roadmap to profitability in the next 6 months, 1 year, or something like that. So that is one of the most critical aspects. All funds investors are saying that, we will invest only once we have the comfort level that your visibility of the profitability is visible to us, and we are convinced on that. And how does that happen? Is that the founder has to control his cash burn rate on a monthly basis. A cash burn rate is like, you are spending money at the top line level to get revenues. But if he is in control and he knows where to spend and how much to spend, that means even if he's burning the cash right now, he's surely in control of his business, and at some point of time, 6 months, 9 months, or 12 months down the line, he will be able to turn it profitable. And that is the kind of confidence now investors are looking at, and that is why now the checks which are being, signed and given to investors, to startups, are also taking a longer term, because investors are spending more time at a more granular level to understand the business rather than just go with the flow of, a hype of a market and all that.
So I think you are giving equal points to the performance as well as the potential.
Yeah.
And you brought in an interesting perspective of the management's credibility and their own competence.
Yes.
Rajiv, are these also the ones that you look at? If you have to rank something higher, potential or performance?
Absolutely, the founder is the key. But I just kind of go back and mention 2 things. So when I look at startups, so I wear 2 hats. So as a founder myself, already Sourabh has covered a lot of stuff. So I look at 2 things when I'm looking at a sustainable business as a founder. One is what not to do. We are always told what to do. What not to do becomes very important. When you are becoming sellable and scalable, you try to do many things. When you're trying to become sustainable, what not to do becomes very important, and understanding your persona becomes very important. Their pain points, how they work, everything becomes very important. Now, we work with a lot of startups. By the way, we are one of the largest corporate open innovation platforms. So when startups want to engage with corporates, we work with almost 115 corporates, almost 700 to 800 use cases per year. And we work with startups who are mature in terms of the use cases that they are working in. And we help them engage with corporates. So when we are looking at a sustainable business, we are also looking at, when I'm looking at a startup, I'm looking at what kind of partnership that they have built to build a sustainable business model. We are also looking at the same metrics that the use cases that they're working in the corporate, how many are repeat use cases they're working on. So those are the things that we look at. And beyond that, as a venture studio, so we also have our own venture studio where we are GTM co-founders. We are looking at, to answer your point, the founder. If the founder has an operator experience for at least 7 to 8 years, becomes very important. If they are second-time, third-time entrepreneurs, it becomes very important. When we work as a GTM co-founder for them, putting in our own money, scaling them in the market.
Sure. So, very interesting thing you said in the first part of it, what not to do. And what Rohit also was mentioning is about when you look at churn rates or you're looking at the annual revenue, etc. And all this boils down to the visibility. So you can have the best of management teams, but if you're not tracking it, if you're not monitoring it, if you're not using it, you don't have the visibility. And how does one really get that kind of visibility? And Sanket, SAP has been quite instrumental in helping large enterprises as well as startups to get that kind of visibility. In your experience, where do startups usually focus on and where should they focus actually? Is there a difference in that?
No, absolutely. And it is so heartening to see this conversation that we are talking about sustainability in a forum of startups, because I have been associated with this ecosystem. It was always growth, growth, growth. Every conversation was all about growth at any cost. Sometimes, right? And that is where the conversations have shifted. In our report also, it is very clearly evident that the conversations have shifted from GMV to GM now, right? What is my gross margin? And that is where the biggest piece when we work with startups essentially is that you can monitor what you can measure. A lot of the times when we are discussing with startups where they are in their sellable and scalable areas, they are focusing on very limited data points. It's not a comprehensive view of the dimensions that they should be looking at. Now, if I want to test a business model, I need to have multi-dimensional way of looking at that business model. It is not only the rate at which I'm acquiring customers, or how much CAC, value of my CAC is, right? There are other layers to it to make it sustainable. Whether my supply chain is sustainable, whether my suppliers are sustainable to support that business model, whether I have the capacity to service this business model in terms of my employees, my ecosystem, right? And when you look at that business model, you test it with these dimensions. Now, these dimensions today, there is no way to capture it. It is all gut feel conversation, but SAP helps you to record this. SAP helps you to record this over a period of time so that you understand which business model works, which business model cannot work, which business model I should pivot on, which business model is sustainable for me to grow outside the geography that I would want to look at, where my gross margin could be. I can predict my gross margins. So some of these things are very crucial, very important. And this is something I would take from Rajiv's conversation, that you should not be doing it. You should be doing what these measurements needs to be done. You should be looking at a systematic way to measure these pieces.
Definitely. Like they say, in God we trust, the rest have to bring data. So I think bringing data is extremely important and to get the right picture. And of course, we get the fundamentals right. Startups grow. Sometimes they grow like they have a hockey stick trajectory. But ultimately, what you have done can take you so far. Many startups hit a roadblock. Sometimes they hit a ceiling. There are certain bottlenecks to their growth. Namratha, Sourabh, whoever wants to take this first, your businesses have also seen various cycles, and some could be severe and you have always bounced back because your businesses have been very sustainable right from the start. Can you share your experiences on this?
Sure, I can go ahead. Yeah, that's an interesting question. And I think irrespective of the sector, there are general bottlenecks at every scale. Like I would say any business which is going 0 to 1, which is a very standard parameter when you're going from 0 to 1 million or say 0 revenue to 10 crores in revenue, whatever you want to treat that, is typically sees a bottleneck in terms of how do we find a product which actually works for people. And that is something we saw at Advantage Club. In fact, we pivoted for a couple of years constantly to find our product market fit. And that was fun time and the most horrible time for me. But that's of course a bottleneck. Then once you cross that, then the next stage you typically see is maybe 1 to 5 and then 5 to 10 kind of a journey. Segue of that's where we are right now at the end of the 10. So, but growing this typically requires a different skill set. So you have to identify your ideal customer profile, you have to go and sell it to them. So those identification and your go-to-market strategy has to be refined. So those bottlenecks become very relevant that unless you fine-tune these, you'll not be able to scale sustainably to the next scale. And now, as we are also going to the next scale, which is 10 to 25 million in revenue. So that's an interesting one where we believe that now it needs to be more process-oriented, more repeatable. As a founder, your role changes from being more hands-on to being more strategic player in the company, and you hire a team to kind of deliver more. And you are doing more non-day-to-day operation stuff. So that's another scale itself. In our business, another bottleneck that we hit very early was that COVID happened, and that actually helped us. Initially, 6 months were very hard, but then most of the organizations became more and more employee-oriented at that time. So that helped us. But at the same time, a lot of my companies started saying that I want a single platform for the whole world. So sitting in June of 2020, I started getting contracts, but I had to be live in like 50 countries in next 2 months. So that was an interesting problem. We navigated that. Now we are live in more than 104 countries thanks to that. So we were forced to scale a lot more faster across geos than what I would have ideally liked to do. So I'm sure in every business you will see such bottlenecks, which might be more, say, external market-led, demand-led, or regulatory-led. And as a founder, it's your job to kind of adapt to those.
Yes. In fact, Namratha, probably, again, pandemic you had mentioned had actually helped you. I want to know, after pandemic, how was that cycle navigated? Was there a bottleneck?
No, I think definitely, right? I think, of course, COVID brought in a much larger volume of users because users had that time. Then it was just about saying, how do we ensure those users continue? Because retention is the biggest lever, and I think we've been talking about it a lot. So for us, it was actually, I would say, bucket them into two parts. Of course, internally, how did we have to reorient ourselves for the change? I think first is, of course, just right from the org structure itself. Like Sourabh was talking about the roles, skill sets, everything changed, right? From saying it's a team where pretty much everything is fluid, focusing on the most important problem of today, we had to sort of shift to a structure where saying there is a clear process, there's a structure, there are different focus areas for different teams, there's a clear monitoring system, of course, bringing in a lot more data to really see where the problem is. So I think structurally there had to be a lot of change to really see how do we manage this larger, the larger user base, the continuous growth that you're seeing. That's one. Second is, I think, again, from, in terms of just fine-tuning the engine. I think for us, again, the platform is something that's global. The experience has to be great for users from across the world, right? So really just focusing on that core engine and focusing on experience, ensuring that all users, there are no latency issues, because this is a gaming platform. You would want to be able to have a very smooth gameplay. no fraud, you're actually getting matched with real users across. So a bunch of those hygiene things actually become a challenge when you start scaling suddenly, right? So I think really being able to plan for it and bringing all of this together was very, very important. And given we're also like a consumer-facing brand, it's also about saying how do you build that brand? Because in order to be able to sustainably grow, beyond the point it can't always be you're spending dollars to really acquire users, right? It is about saying how do you become that household name? How do you become the brand known for this so that you're able to bring in users organically as well? So I think especially for B2C, that's another engine that really needs to start kicking in. Of course, needs time, but I think focus and effort towards building a brand really, really helps. Beyond a lot of other external factors, it could be more policy, regulation. I think internally itself, there are multiple hurdles to sort of clear.
In fact, on the org structure, the skills, and very pertinently, building a brand. I think these are three big ways one can really cross that bottleneck. And Rohit, in your portfolio of companies also, you might have seen some hitting maybe a dead end, and some who might be finding difficult to bounce back. How do you advise them? What exactly do you advise them?
I guess the advice is typically understanding what is the problem. Is it an internal problem regarding why they are not being able to scale up? And if that is so, then obviously the founders have to take a call that do they need to pivot their business? Do they need to change their market focus, or whether they need to change their pricing or something like that? It's an internal call they take. But yeah, we as advisors really don't get into that kind of mode of advising them. But we definitely show them options that, these are the things that are a problem at your end, and you should sort it out. So internally, I guess for every startup, I think the goal is always about the success is measured by if you're scaling the business. And if that is not happening, then obviously there could be a fundamental flaw in their business model. Now, business model has different buckets to it. So they will have to evaluate it. And we as trusted advisors, being quite founder friendly, we are always there to advise them as far as, from our ecosystem of, network of the kind of people we know that, they can get some kind of advice, a mentorship from people who have been in this industry or have, built businesses and exited, and have a kind of a user case or a case study to share with them. And apart from that, we also sometimes, not as part of our structured kind of advisory, we also do some kind of, business development support to them, that introducing them, making open them doors to, larger kind of brands where, they can piggyback on those brands and scale it up. Like, spending a certain amount of effort in tying up with a larger brand makes more sense than trying to reach out to an individual customer. If you are tying up, for example, I can just give you a small case study. This was a long time back. Paperboat was growing, and they were raising funds, and one day they tied up with Indigo, and with that Indigo brand, that Paperboat started selling in the flights. So they got a chance to piggyback on a brand strength already. So that was a great relationship and all kind of things. So something like this is already done and explored day in, day out with founders of startups and all who are looking for some kind of support and all kind of thing.
Sanket, any views? Especially because you provide those kind of enterprise solutions, and when they don't see a growth, is there typically a tendency to spend less on technology? Or do you give them better solutions and better insights there?
Yeah, so at SAP, we had a very different approach to this, right? We make sense to companies during their growth stage also, because then the scale is a problem, and then you want a sustainable scale. So SAP comes in view or in support. But when the things are not well, you want to deep dive into your organization. You want to deep dive into your spends. You want to deep dive where my dollars are getting in, right? Is it getting me value? And that is where also SAP plays a major role, right? And there are so many customers today we have seen the hyper growth stage. It is not only about startups. We have seen those hyper growth stage in traditional organizations also, whether it's retail, right? Whether it's consumer goods in that sense, where the spurt is very fast. It's a hockey stick story, and then it flattens out, right? So there are many things that happens before it flattens out. And those signals are what we need to catch, definitely. Because it's not one day that everything is hunky-dory and
Before
the
they
second
happen.
day.
Yeah, before they
Absolutely.
happen.
So how do you catch those signals? How do you have a 360-degree view of your business? Whether those are the 5 pillars of your business, largely, when I talk about it. It's employees, right? Your suppliers, your customers, your GTM strategy, as well as your product differentiators. Right? If all these 5s are getting monitored at any given point in time, right, you will understand and you will get those pulses, that sense that something is not moving in the right direction. And I need to start thinking about this pivot or changing my geography or looking at a different product line. Right? There are so many examples that I can narrate here, but looking at the time, I would rather say that if you monitor these 5 pillars of your business, it doesn't really matter what level you are, whether you are in saleable, scalable mode, you will definitely get a sense of your business. Largely today, when we interact with customers and startups and founders and CFOs, there is lack of data. It's all generated at that moment. And the data will help in the moments that matter, essentially, right? And that is where SAP comes in. We have customers who, and I can take that example in Bangalore itself. We have a large two-wheeler EV customer who started their journey with SAP before they started their factory. So if you have a long-term vision, yes, SAP will make sense to you. And it will help you to scale.
And I think that's risk management, where you understand what would be the risk and you take steps before they even start to show their face. And Rajiv, in your experience also, and what are the biggest risks that come as an impediment to growth?
Before that, I want to give a caveat.
Okay.
Like Sourabh, I enjoy the sellable, scalable 0 to 1 journey. This is my third startup, and I love that. So I am doing the sustainable journey for the last 3 years, but I love that. That is why I have a venture studio where I'm working with some of the startups in the 0 to 1 journey. To answer your questions, yeah, risk is something that once you are in the market, you have multiple kinds of risk. And we all know about the market risk, the political risk, all the kind of risk that we go through. Being in the startup ecosystem for the last 15 years now, I have seen the journey of risk at multiple junctures. And as a founder, you have to be very cognizant about what is happening in the ecosystem. So you have to be abreast of the ecosystem. You have to continuously monitor as the data that is visible. And there are a lot of data which is not visible. So the invisible data, that is also a very critical thing that you have to be aware of to manage your risk. And as a founder, I keep on saying that when my team, so I just had a roundtable few days back, that if you are not coming up with data, you have to go with my gut, right? So whenever I have this 15-20 minutes meeting, I see a lot of data around the key points. I have a matrix, there are 5-6 areas that I look at, and then based on that, the decisions becomes easier to make. So I think, yeah, absolutely. So I think the risk has to be always both what visible data and invisible data that you have to look at.
Yeah.
I just wanted to add, as far as, one of the factors which startup founders typically miss is, and which is very important for them, is knowing your competition. Every startup founder, whichever sector they are in, there are multiple peers and all. There are some which are larger than them, and there are some which are catching up. So knowing your competitors and what they're offering and how they're doing and their traction data is also equally important for success.
Sorry, are you suggesting they typically don't do a proper competition mapping?
I guess now it is more visible, but when you see failures happening more than successes, then it becomes a question that whether, whether the timing was right or was it the right thing to enter into a market which is already very competitive. See, we have seen a lot of startups which were into groceries sales and all, which just went bust. It's a large scale business, needs deep capital pockets and all. And once you look at so many of them shut shop across cities, then you realize that I think they should have done the competition mapping or studied the timing of entering the market. So those are the kind of nuances which every startup founder should know also.
I just want to add with Rohit was saying that competition definitely, but alternatives. You don't look to be competitions, but there are alternatives which become your competitions pretty soon. So that also you have to be very cognizant about. What are the alternatives which doesn't look to be competition right away in the next 1 year?
So I'm totally with you on that the competition really is an important parameter, and a lot of competition comes indirectly. As a startup founder, I think it's also your job to find how can you collaborate with something people perceive as your competition as well. Like globally, we work with a lot of people who do things similar to us in terms of exchanging marketplaces with each other and help learn from each other. That's a big part. But I'd say even another important risk that we all founder kind of go through, we all look at our data, we all look at our metric, we all look at our customer stories, but there's so much things happening in the world which you don't really control, right? Like when you're talking about fundraising, Ukraine-Russia war changes the whole dynamic. Investors go on a standstill mode whenever such war things happen. The multiples change. A lot of economic impact can happen when, say, there's a rate cut or a rate increase. So those are the things you don't really control. I would say that those are all risks to any business. But ultimately, as a founder, it's important to remember that this is all cyclical. Like everything in 6-7 years, there'll be a few years which will benefit you, and there'll be a few years where certain policies will work against you. So you should be ready to kind of navigate on both the sides.
Yep. So it's a very interesting conversation, right? Risk management. Many a times I've seen that risk for a business can be an opportunity for another business, right? Challenge for one setup can be an opportunity for a new entrant, right? So you need to weigh the risk when you are doing that business, essentially. And risk essentially is an amalgamation of a lot of data that's happening around the world, what is happening in the industry, what is happening in the regulatory world. And I think today, in some cases, I would not say, I don't want to generalize it for startups or founders, the ignorance of some of these risk elements is quite large, because their focus is very, I would say, the focus is on growth largely. So sometimes they are taking knowing risk without enough thought process that if the risk happens, how will I come out of it? They're waiting for that eventuality to happen to see what hustle that they can do to come out of it. So our approach or thought process when it comes to some of these pieces is that there is, for regulatory and compliance pieces, do not take chances. It's better to follow the system, law of the land. Rely on a partner who can give you that guarantee that once you are using that, everything is taken care of, right? Those are the last things that you would want to get into. So that is one sort of an advice. And second, many of the risk emerges because we are in a hyper growth, our focus is very different. And the idea that has germinated and the thought of a startup doesn't get executed on the ground with the same tenacity or passion. There are a lot many loopholes that get opened up in it. So how do you channelize your thought into a scalable process within the organization where each element of that organization is working towards that and plugging those loopholes so that there is no risk, internal risk is not coming out, right? There are a lot many organizations that I have seen that there is a lot of risk created within the organization. External risk, you can only react to. Internal risks are something that snowballs into something so big that you then cannot overcome them. So there has to be a process-driven approach so that a startup can move from that operational role to a strategic role. Many people move to a strategic role, but don't lay those foundations for the organization to run with the strategy that they have laid out, right? So I think those are the pieces where SAP comes in beautifully, whether it's employee experience, whether it's employee policies, whether it's government-related policies, whether it is customer-related pieces of it. So we can definitely help some of these ideas to become reality for most of the startups and bring out or reduce the risk elements when you're running that business.
I think I just have one point to add on the whole external risk part, right? I think, of course, like MPL, there are a lot of others building in new spaces. So these sunrise sectors might not have all the regulatory clarity that's needed. So I think one is, of course, just being cognizant of it, being fully aware of what's happening outside. But I think second is also being more proactive in working with various stakeholders. And I think something that we've been learning and doing in terms of working either with government stakeholders or other industry associations to really help get that clarity that's needed, because beyond a certain point, sustainable and scaling becomes really hard without having that clarity. So I think for these sunrise sectors to sort of emerge and to be able to build sustainably, I think being able to understand that risk outside and being able to play a part in reducing that becomes very important.
Definitely. So, cognizance of the fact that risk is definitely a possibility, and any eventuality can happen, and there are many a slip between a cup and the lip. So, anything can happen. There are external risks, but what the panelists also mentioned was there are a lot of internal risks also, which are controllable if you have a more proactive approach. If you look at those 5 guidelines which Sanket mentioned, which includes importantly customer, which includes the GTM that you have, which also Rohit mentioned was looking at also the competition. So a lot of things to be looked into, and the metrics which everyone is focusing on, I think if I have to pick up a common thread, is actually more at the unit level rather than at the macro level. Everyone talks about how you get revenue back from a customer, how much you retain every customer, and it's not really about the bigger numbers. Excel sheets can mislead you, but you really need to get into the depth of probably every customer and every client and do a more micro analysis. And thanks to panelists for bringing out all this more like a blueprint for everyone. To understand how to build a sustainable long-term business. And if I see there are so many things, my respect for all the founders here only increases for all the hard work they are putting in. So thanks everyone, all the founders in the audience as well. Thank you.